Welcome to today's market update. I'm Maya Keynes, and joining me is financial expert Eli Sterling. Good morning, Eli.
Good morning, Maya. It's a dynamic session ahead of us with several key developments across markets and policy fronts.
Absolutely. Let's dive right in. We're seeing major movements in the crypto space, especially with altcoins. A recent YouTube trader highlighted a massive 200% run in a single day on one asset, Omni, and took profits, reallocating into smaller plays like War, Reno, and Rocket Pool. What does this tell us about current crypto volatility?
That's a textbook example of how extreme volatility can create both opportunity and risk. As the trader noted, assets with 20 to 25% monthly swings can see daily moves of 6%. So a 100% plus rally in just a few days is rare, but not impossible. It highlights why active management matters in crypto, especially in altcoin portfolios where liquidity and narrative shifts drive price.
Speaking of technicals, let's get into some charts. Starting with Avalanche dollar on the daily time frame, the Fibonacci retracement shows price reclaiming all levels and now sitting at the 0.00 resistance, around 35.38. How do you read this setup?
It's a classic case of bullish momentum meeting historical resistance. Price broke through every fib level. But here's the catch. The relative strength index is over 79. Stock RSI is overbought, and we're well above the zero-lag moving average. That tells me while the trend is up, chasing fresh longs here carries elevated risk. I'd wait for a confirmed breakout or a pullback to 3170 to 3230 for better entry points.
Interesting. Now turning to Cardano dollar, also on the daily chart. Price is bouncing off the 38.2% fib level and pushing toward the swing high near 0.9525. Where do you see the path from here?
The momentum is clearly shifting in Cardano's favor. We've got higher lows, rising volume, and a fresh bullish crossover on the zero-lag trend. The Stoch RSI just flipped bullish too. I like this setup a lot more than Avalanche right now. A close above 0.95 opens the door to 1.00, with support holding around 0.91.
Thanks, Eli. And finally, a quick look at Solana dollar. Price is flirting with its previous high at 253.35, and the average directional index shows a strong uptrend. Is this breakout imminent?
Yes, the average directional index is rising, plus directional indicator is strong, and price is holding above all key moving averages. But again, we're nearing overbought territory. I'd treat any breakout above 253 with caution, unless it comes with volume. For now, I'm watching 239.40 as critical support. If it holds, Solana could test new highs.
Let's shift gears to macro. The Fed cut rates by 25 basis points, with signals of 2 more cuts this year. Only Steven Mnuchin voted for a larger 50 BP cut. How does this impact markets?
It sets a dovish tone, especially with inflation concerns still simmering. Senator Tina Smith recently said tariffs are fueling inflation, a view that contrasts with Fed Chair Powell. If businesses continue raising prices in response to tariffs, we could see further upward pressure on core CPI, complicating the Fed's easing path.
And politically, Jimmy Kimmel's show was suspended by ABC after controversial remarks about Charlie Kirk and the MAGA movement. Nexstar Media pulled the plug, calling them offensive. Does this affect Disney's stock outlook?
In the short term, yes. Disney already settled a $5 million defamation lawsuit with Trump over similar issues involving George Stephanopoulos. Any renewed political backlash can spook investors, particularly in media stocks sensitive to brand perception and advertiser confidence.
To wrap up, what should traders and investors be watching tomorrow?
Keep an eye on whether Avalanche breaks 35.38, Cardano pushing past 0.95, and Solana attempting a breakout above 253. Also, watch for any escalation in trade rhetoric or fresh inflation data that could sway the Fed's messaging.
Thanks, Eli. That's all for today's market update. Stay tuned for more live analysis throughout the week. Until next time.